Auzubillahiminash-shaytanir-rajim. Bismillahir-Rahmanir-Rahim. Today we'll be discussing the last topic of first chapter, and the topic is benefits of insurance. We will talk about the benefits which insurance provides to the people as an individual, and the benefits provided as a whole to the society. In benefits, we count peace of mind. When a person takes insurance, the person gets peace of mind. How? We'll be discussing that. Then there is loss control. Insurance companies don't provide only financial compensation, but they also advise clients how to prevent the loss. We'll talk about that. Social benefits, what benefits it brings to the society as a whole, investment of funds for the economy, and the promotion of savings. So, starting with the peace of mind, when I take out my car uh, and bring it on the road, I always fear that there can be an accident and there will be a financial burden on me to cover for the expenses of the accident. At the same time, if I park my car in a parking lot and I go for some shopping, I have the fear in my mind that if I return, my car might be stolen. So whenever I walks away, there is a fear in my mind. But if I take insurance of my car, then I know that if there is an accident or there is a theft of my car, God forbid, the insurance company will be there to compensate me. At the same time, this peace of mind is very important for a businessman as well. Like I was an individual customer and I was taking insurance for my own consumer need. But a businessman who builds a factory, establishes a factory, and invests millions of dollars in erecting the machinery and things like that, so there is always a risk of fire, earthquake, short circuiting, rights from the employees. There can be theft. So there can be accidents. So in all these happenings, there can be a big financial burden on the businessman. But since insurance is there, so when he takes that insurance, uh, mm, he gets the peace of mind that if any of these happenings occur, there'll be someone who will be compensating. So, the knowledge that insurance exists to meet the financial consequences of certain risk provides a form of peace of mind. This is important for private individuals when they insure their car, house, life, and other possession, but it is also of vital importance in industry and commerce. Why should a person put money into a business venture when there are so many risks which could result in the loss of his money? But businessmen invest in businesses as he transfers some of the vital risk to the insurer and retains peace of mind for carrying out his business. So there'll be more jobs, more production. In motor insurance, insurers advise for satellite based tracking devices in the vehicle, which reduces theft risk. Like there can be the family of the person who can be taken away with the car, and that satellite tracking device might locate the car, the vehicle, and the vehicle along with the family can be recovered. So, then there is a social benefit. What is the social benefit? By providing financial compensation if a loss occurs to a business results in continuation of that business, which means no loss of jobs, goods, and services, which could have been resulted if some system of insurance was not in place. Like for example, there is a fire broke out in a factory and the factory gets damaged and the owner has no money to rebuild that factory. So the factory has to be closed down and many people will lose their jobs. and those jobs will bring more unemployment in the society and bring more distress to the family, to the owner, to the market, and the whole business circle will suffer. But if there is insurance and if any incident occurs and insurance companies pay the insurance claim check and ask the owner to rebuild his factory and start again, so with that insurance mechanism helps in restoring the functioning of the factory, restoring the jobs and normal functioning of the market. uh, let's take an example of pharmaceutical manufacturing unit which has more than 100 employees. Fire breaks out in the factory, resulting in major damage to machinery and the factory building. So the loss is very large, and the business owner doesn't have the funds to bear it. The pharma industry has no money to rebuild the factory. It has to be closed down, resulting in loss of 100 jobs or more, and the good medicine will no longer be produced. So, however, if the factory building and machinery had been insured against the risk of fire, there would have been no need for business to close because the insurer would have paid the claim to the manufacturer and the factory would have been rebuilt with that money. The business would have continued, avoiding the loss of jobs and medicines. Then there is investment of funds. Insurance companies generate funds through collecting premiums from the clients, and since the loss doesn't occur on day one, so there's always a time gap between receiving the premium and paying the claim. So insurance companies take the benefit of this time gap and they invest the money which they have collected in the form of premium from the clients. And those that money is invested in banks, and banks provides those funds to the entrepreneurs for promoting their business, for manufacturing goods and creating services, so that that money circulates in the economy and move the economy. Insurance provides a channel of investment as well. Insurer receives money in the form of premiums from their policyholders. There is always a time gap between receiving of premium and occurrence of claim. The premium may be received in January and the claim may occur in November. The insurer has all this money at their disposal which they can invest. Insurers invest in a wide range of investments. They provide loans to banks and leasing companies, which onward provide financing to the entrepreneurs and businesses which make the economy running. Such investments are the results of savings of thousands of people in the form of premiums paid to the insurers, which brings an element of savings in the people. Let's take an example of a person named Ayaz who takes out a life insurance cover. Ayaz cannot avail the institutional investment opportunities because of lack of expertise and legal constraints. However, when Ayaz added the premium to the premiums paid by the thousand of other people, a reasonable amount of money is available for institutional investment, which can be managed by expert as pool managers. Thus, the insurance premium that Ayaz added to the billions of dollar premiums for other policyholders has collectively increased investment in the economy. So, insurance promotes institutional investments, and insurance also promote individual savings. Like insurance inculcates habits of saving among the customers. Like in saving life insurance contract for multiple years, if the client survives the contract period, then insurance company pays client a handsome money as saving. Like in unit linked life insurance contracts, which are for 5 years, 10 years, 15 years, 20 years, when the contract period ends and the client doesn't die during that period, then insurance companies pays lump sum saving amount to the client, which is a saving for the client. So at one side the client avail the risk protection, and at the other side there is an element of saving as well. So these are few benefits. There are other benefits as well, but these are more important. So I thought to share it with all. so that they understands the utility of the system of insurance for individuals and for the society, and realize that this mechanism is very important. At the same time, whenever bank provide financing or loans to the clients, the bank takes the assets of the client as a collateral in mortgage, in pledges, and the bank also require insurance of that asset. So if any disaster comes and the assets gets damaged, and the client is not able to pay the outstanding loan of the client of the bank, then due to the damage of the asset in a natural disaster, insurance companies pays the claim. Bank takes its outstanding loan and interest and pays the remaining to the client. So, if you know, insurance is an important tool which is used as a risk management tool in banking through for securing its recovery of outstanding loan and interest. So, the banking is also being facilitated and supported by the system of insurance. So these are the few benefits, and inshallah we'll discuss it more. And stay tuned, and Khuda Hafiz. Thank you so much.